Good morning, traders. Welcome to your 7-minute market update utilizing technical analysis to predict direction based on human emotion. Today is September 9th, 2012. Lots to talk about, so let's get started. All right, this is a chart of the SPY, which is the ETF that tracks the S&P 500. I do apologize if it sounds like I'm yelling. It is 7 o'clock in the morning for me. Unfortunately, there's yardmen doing yard work next door, and I don't know why they choose to do it so early in the morning. If I wasn't at the age I am now, I'd be out there yelling at the guy. But you know what? Everybody's got to make money. The economy is not as good as we all think it is. So I'm just going to have to let it go. And I do apologize if there is any background music or if it sounds like I'm yelling in the microphone. In any case, let's get started here. This is the SPY again. So quick recap here. We had this doji candle created on little higher volume. I said that this wasn't necessarily justified. However, it is something that we have to be aware of. Sure enough, we did get a small an additional pullback on this candle, but we were unable to close below this candle here, which was the candle on higher volume. Remember, higher volume, or the more volume you have, the more justified the price is. So therefore, if we have this reversal candle on higher volume, then there is a possibility that we may shoot higher. We did not do that. We actually went a little lower before shooting higher here, right? So this is Thursday's candle here when they released a big news about Europe's quantitative easing or something very similar. Okay, so the markets did like this, but you have to realize something here with this big move here. Do you honestly think, well, in my opinion, and again, these videos, I just want to make sure that you guys understand. I'm going to give you the bearish and the bullish sentiments, and then you guys decide whether or not we're bearish or bullish. Right now, it does look pretty bullish to me. I think any pullback can be bought, in my opinion. Unfortunately, I am still short the market by going long the STS, and that's simply because I haven't been stopped out yet, and that's how I play the game. Rules are rules. When I set my stop is set, and then I just set it and forget it, just like the rotisserie oven, okay? Anyways, to make a long story short here, we had this huge spike up on Thursday here. This is obviously, in my opinion, in addition to people buying into the market because they liked the news about Europe's quantitative easing or something very similar. We also have federal manipulation here to prop the markets higher. To me, in my opinion, this is definitely something to be aware of, and we all know about the market manipulation. It's not a big, it's not big news. It is a big deal, but it's not anything like you know what I mean, like, oh no, the markets are being manipulated. This has been going on for years. In fact, it's been manipulated since the markets even open. It's just a lot more realized today. In any case, the candle closed above the previous high here, okay, or the recent previous high, which indicated a big move, okay, a very big sentiment and move, bullishness. Okay, now was that supported by volume? Is this price here validated by volume? And so let's just take a look for Thursday. Yes, it has. This volume is just very substantial. It goes all the way back to August 2nd. It is a it justifies the move in price, which gives it a bullish sentiment, which means that it could go higher, or the likelihood is that it will go higher. And then definitely it happened on Friday. We went higher, but it wasn't by very much. It's up by 56 cents. In any case, it did go higher. This move was justified. This breakout was justified. I wouldn't be surprised if we break out of this rising wedge here and then we come back down shortly to retest to go higher. It's unusual to see a rising wedge like this break out. You know what I mean? It's normally a down move like this, a down wedge here, and then as price trades in here, it breaks out that way. You know what I mean? But I have seen this happen. It's not unlikely. I mean, this happened the last time we had a quantitative easing number 2. I think a lot of people were seeing divergences, bearish divergences and whatnot. They started shorting the market, and everybody got their money taken simply because they didn't think that a bearish divergence could last very long. But unfortunately, nothing's 100% you know, true, and with all the federal manipulation and government and institution manipulation, it doesn't necessarily always play out, especially nowadays when right now we're in an election year, and in the next few months, President Obama, in my opinion, is going to try to prop the markets as high and as fast as possible. That way he can justify being re-elected. Okay. All right, so here's the thing. So we're up into the upper trend line here, which is pretty good resistance. Okay, so just keep that in mind that we could punch through, although we could punch through the upper resistance line here, there is a possibility that we could get a small pullback first before going higher. Unfortunately for me, it's just for me, it's like, well, if we get some sort of, at least some sort of correction here, some sort of small correction, at least into maybe this 141.58 level here, which is also a calculated level that I just made on Friday. Okay. Oh yeah, that's another thing. I've redone all the mathematical calculations simply because after this move here, it negated all my lines, my previous lines here. I mean, I just punched through it like it was butter. When that happens, and I see that happen, I definitely know that I have enough data to recreate more mathematically calculated levels, and those levels were created back in around this area here, so they're all used and abused, so it wouldn't really matter. So these are nice, fresh, new mathematically calculated levels. And again, if we can pull back into this 141.58 level here, then I can definitely see it getting into this 147.05. Not saying that it cannot just shoot straight into this 147.05 level. Again, it is the time of when President Obama wants to get elected. Uncle Ben wants President Obama to get elected simply because he likes the fact that he can devalue the dollar and to prop the markets higher, and that's just basically what's been going on this today, and I'll show you that in a little bit. But in any case, going back to what I was previously saying, this upper trend line here, it's right into this upper trend line. And is there any other secondary source saying that this is pretty good resistance? Let's just take a look here. All right, this is the weekly chart of the SPY. Okay, so let's activate this drawing here and then just go straight across there. Where are we? Do you see it? Yes, definitely here, right into this pivot point of 2008. Okay, this day here was May 19th, 2008, and we are right into the weekly resistance here. Okay, and it definitely is a possibility that we could get a slight pullback on this level here before possibly going higher. And I do think, to be honest, I mean, really, if the markets do take a huge dump right now, it wouldn't really look good for the election year. So they're gonna do everything possible to prop the markets higher. Again, nothing's 100% guaranteed, and the technical analysis right now is telling me we're into resistance, so we should see somewhat of a pullback. So in my opinion, you got to trade what you see, and right now I see that we are due for a pullback. Whether it'll be a correction type pullback or a little minor pullback, that's the real question. Previously, in previous videos, I did mention this double top here on the weekly, and I mentioned that because this was close, this could be used as a double top that's already in place. So this could have been a triple top, and triple tops don't work as well as double tops, unfortunately. But this is technically, on a technical level, a double top. We did get a somewhat of a small pullback, and I did warn you guys about that. Unfortunately, because of the low volume and because of the news that's coming out of Europe, we broke through the double top. All we need to see now is a confirmation close, which is on Friday, the end of day Friday of next week. If we close above this candle here, then this definitely validates the upside movement or the bullish movement or the breakout of this double top here. Now let's take a look at volume for this week. It wasn't very much. I mean, the volume, this candle here was actually higher than this candle here. Not candle, the volume. This volume here was just slightly above this volume here, simply because of Thursday and Friday. That was it. Thursday and Friday saved the day, and but if you add in the missing Monday that we didn't have because of the holiday, then this candle could have been higher than all of these candles all the way back here. So that's definitely a possibility and something that we have to watch out for. What I mean by that is this candle could excuse me, could be validated by higher volume. It's just we were missing one day. Okay, so that's the SPY. To take a quick look at the dollar. Now this is something very, very interesting. This is a daily chart of the dollar futures. Okay, now this is very, very interesting. And why is it so interesting? If you looked at my previous videos, you'll see that this $80.61 level was in here for quite a while. I mean, it was in here back in July 29th. Okay, June 29th. Okay, I had this level over here. Maybe I should have recalculated it after it's been so long, but I didn't. And looks like what happened, it just pierced right through it like butter. We also had this support line over here, and I believe, if I'm not mistaken, we also had a Fibonacci retracement somewhere around here that validated that move, and that was around here, this area over here. So yeah, we had somewhat of some support. We had the 618 right there, and it just pierced right through it like it was butter. They devalued the dollar like it was nothing, like it was like you know I don't know what to call it. But in any case, that $80 level is no longer valid. We do need a confirmation close below that. But if you take a look at this dollar here, we have this trend line going up. Okay, now this huge long candle is actually part of after hours. Let me take that out there. There you go. So this is actually what happened during trading hours of the US dollar in futures, and it kind of got a little bit of a pullback over here, a little bit of a bounce, but I do think that it does have a possibility, a possibility of getting into this bottom trend line here before getting a small bounce. Now the bounce, would it be a substantial bounce? No, because we're gonna have resistance all around this area over here. So I still do think that unless the dollar can break through or past this 20 moving average, this 200 moving average, which I don't think it can, then the U.S. markets or the S&P 500 does have a possibility of going higher. Okay, so I expect maybe a small bounce here off of this trend line, and then straight down to the 78, 74 level before getting another bounce, which would also be a double bottom. Okay, again, these are mathematically calculated levels. I don't have the purple lines in here because this is a little bit more critical. I don't want to take the chance. I know the pink lines work perfect. Well, except for that $80 level. And then I also have another one here at the 76.38, which just so happens actually is lower than there. Let me see if it goes even back further. 76.38. Yeah, so we're at a gap fill here. So just so happens the calculation ends up right at this gap fill here. So we're going to have some support here, and again, the dollar is inverse to the market. So if the dollar gets a bounce, then the market's going to pull back, and if the dollar continues lower, then the markets will continue higher, and that's just how it's been, and that's how it will most likely be. So that's the US dollar. Now this is a chart of another chart of the US dollar, but it's not the futures. Okay, it's the UUP. Again, right on this day here, we're into not, I don't see any technical support levels around this area here. So I don't see a chance of the UUP bouncing until maybe over there, which is gap window, over here, which is gap fill, and then obviously over here, which is the pivot point. So right around this area, we're going to have some support here, and at any time we get a bounce is when the markets will get a pullback. And when we get a bounce here, we may consolidate first. Okay, we're going to consolidate and then come down lower here, which is the pullback on the stock market, in which case I would be a short-term bull on the SPY and look for long plays. Okay, but that's what I see now as far as as far as what the chart is telling me, or charts are telling me. And since I'm ripping through this analysis, I kind of wanted to make it as fast as possible. I do have a mathematically calculated level for the GLD, which is gold, or the ETF that tracks gold, which is 174.29. All right, we do have this upper trend line here that we could possibly get a bounce off of. All right, but again, until the volume comes back into the markets, the volume has come back, but it's not substantially back. Again, our average is 150 million. So let's take a look. This huge candle here on this pretty good volume here, and this is again I switch back to the SPY daily. On Thursday we got 158 million, and then on Friday we got 107 million. Obviously Friday is low volume days, so we got 107 million. But on our biggest volume day, which was 158 million, it's still just 8 million above the average. So to me, the volume has not substantially come back yet. It is not consistent, and that's what I need to see. So switching back to the GLD and the daily chart, because of that, I normally take, or I'm going to be a little bit cautious on shorting if I do decide to short. Right now, for me, it's too long. It's too late to go long unless I find stocks that are into support. But most stocks are, obviously catching a bid simply because of all this good news on Thursday and Friday, and because of that. it's already too late to go long in my opinion. Okay, I mean it'd be chasing if I go long now. So what I would do is I would catch the pullback, which is the 174.29. Maybe we get an actual pullback on this level over here. Okay, that's a possibility. But if we get into this 174.29, I mean we go straight into this 174.29, just boom straight into it. Then I'll probably take a short just for the pullback. Okay, so it'll be a short-term trade short, and then I'd switch it around and then go long on the GLD. Alright, this is a chart of the JJC. I recently had two calculated levels here. So we traded around here. We got a bounce right here. This high candle is 44.83. So it was about 4 cents off. And then we had a pullback, but the pullback was short-lived, and we just cut right through it like butter. I mean, we cut through these mathematically calculated levels. We cut through this 200 moving average, and now we're headed for this 47.52 level. Let me just make sure that these are new drawings here. Yep. So this 47.52 level was done and created on Friday, and this might be a pretty good level to go short on. Now, again, the short would be short-lived. As how I see it today, and with the election year coming up and all that. I mean, once the president gets elected, or once a new president gets elected, then the markets are out for grabs. It's free fall. I'm pretty sure everybody's going to just sell off because I don't think they're going to be able to prop the markets and continue to prop the markets for that much longer. And to be honest, the more they manipulate the market to the upside, the faster it could come down. Okay, so just keep that in mind. Last but not least, I wanted to talk about the USO, which is gasoline and or oil. Sorry, and we have these calculated levels up here. I may actually consider redoing these calculated levels just because of the big moves that's been happening lately and the news that's coming out. I just want to make sure that these levels are still accurate. And a lot of times, these levels were created August 3rd, so let me see. Yeah, I could definitely redo these levels here. But in any case, these levels, even though they're old, as you can see, the top one here was never hit yet, so it's still valid. We went right into these two calculated levels here. We got that bounce, but the bounce was short-lived, very short-lived. We went right into these levels. We got that bounce, and then we pierced right through it. Okay, we didn't even make it to the 200 moving average before we started creating this symmetrical triangle pattern here. Now, as you know, symmetrical triangles, I love triangles, I love wedges. They work more than not for me. Okay, again, that's just for me. But when I see a symmetrical triangle, that means it could go either up or down. Okay, so it's either going to be bullish or bearish. So it's something that we have to keep an eye on. I don't know if they're going to release QE3 just yet, simply because oil is so expensive. And when you go put gas in your car and it's so expensive, they do QE, I don't know, 3. Your gas is just gonna go higher and higher. So they're gonna need to drop oil first before they can announce QE3. That's just my opinion. Can they do that? They can definitely do that if they wanted to. So what I'm seeing here is this. Alright, let me kind of just zoom out here, and let's grab the pivot top here. We come straight down and draw this line here. That's a pretty valid trend line in my opinion. Okay, we break through above this trend line and we confirm. You guys all know what I mean by confirm, which is confirming to me is you say you break out of this upper trend line somewhere around here as an example. Like you break out and then the next day you close above that, then it's a confirmed breakout on this triangle here, and we wait till I'll wait until we get into this this mathematical calculated level until we come back down to retest, because now it becomes support before going higher. Okay, so we just need to keep an eye on that. But because we are into this upper trend line here, which is a pretty substantial trend line, even though we are somewhat consolidating, there is a possibility we may just bounce off of this upper trend line and come straight down. Again, this mathematically calculated levels here, these two levels here, they're used and abused already, so I don't trust them. In fact, I should just take them out already. Okay, there. So that's more than like, I mean, some people could consider this an inverted head and shoulders. I wouldn't, but that's just my personal opinion. So we could definitely get a bounce off of that. We have the 50 moving average right under it, giving it a little bit more support. So we just have to keep an eye on that. But I'll be honest with you, for oil, for the USO at least, it could go either direction because of this symmetrical triangle here. and either break out up or down, it should be a pretty substantial move. Okay, so that's pretty much all I have. Just hang in there. I'll try my best to create. I know I've talked about creating more videos in the past, but if there's no big changes that are happening, then I'll just pretty much be redundant in in what I'm talking about. So if there's any big moves next week, you can definitely expect me to release another video. But until that happens, if next week is a pretty quiet week, then I probably won't be saying anything until some action starts happening. So in any case, I really appreciate you guys stopping by to watch my videos. I honestly think that if any of you can, give your opinion, that'd be great, because whatever you guys say would definitely be helping others that are watching as well. And thank you very much again, and God bless to you all. Thank you for watching, and I hope to see you in the next video.